as a valuer, when we approach a business and we try to understand what they're doing and how we can value it, one big thing is, okay, is this owner just getting a job, or is he building a real business that is sellable? To put it in a nutshell, if you can walk away from the business and go in wherever you want, let's say South America for 3 months and come back and nothing collapsed, that's probably a good business, right? If you go to Bali 2 weeks and you come back and it's a complete disaster and everything stopped, it's probably not a really, really good business.
If you've ever wondered, or if you're thinking of selling your business now, not only how much is my business valued, but what is it I can do inside of my business to increase its value? We all work on our business for hours and hours a week. If we took the mindset that we're building an asset for the future, perhaps we'd do things differently. Join me to have a listen to Adrien Giraud from Insight Partners. He's a valuer and experienced in M&A, mergers and acquisitions. And we're going to discuss how valuation works, what are the key drivers for increasing the business's value and the price you get at the end of the day, and some of those things you can do and implement in order to get yourself there. Come and have a listen to this. So I've got clients at different stages of growth.
Yeah.
And it's really interesting to see even some of the businesses that have been around for 20 years, they're not in a state that you and I would say that's saleable.
Yeah.
Or if they went to market to sell it, they wouldn't get a premium or even what we'd call an average price.
Yeah.
Because they're not organised for a sale.
Yeah. And the big reason to me, is, coming from outside Australia, and you can see how Australia has been thriving for so many years, and everything has been really good here, easy life compared to the rest of the world, like no real economic crisis, so good money. So you could make really a good money in Australia without pushing too hard, in my opinion, compared to the rest of the world. Of course, everything is relative. But what I tend to see is, for example, in Europe or US, those markets that are a bit more mature and also much more competitive, it's cutthroat over there. So people are really much more into, or creating an asset and thinking about the future and all that. And I feel there's a bit this mentality in Australia where everything is short term. It's just like, oh, look, it's working, that's fine. I'm happy with the return I'm making. I don't want to push too hard. It's just like it's good like that. So let's keep it this way. That's fine. So don't don't fix it if it's not broken, right? But what a lot of people don't realize is it's actually broken. So and when they come, they come to the end of their business life and they're like, oh, I'm going to put the business on the market, or I'm going to sell it, etc. And they have those big numbers in mind because, oh, my mate did this, etc. But sometimes it's a bit delusional. So when you come and you say, well, you're expecting, I don't know, I'm just putting a number there, but 1 million for your business, it's actually only worth, maybe at most $400,000 if you're lucky. And people will go, oh, wow, but why? And then you need to explain everything, etc. So there's usually a bit of a heated conversation happening, but
you become very unpopular for a moment in time.
Yeah. And all of a sudden I become from being like his best mate, like the worst value ever, but but it is what it is. And so I think there's a bit of, also like historical context and economical context to it, where people have just been used to have a really good life and lucky country at the end of the day.
And we still are, really, aren't we, compared to the rest of the world?
But I think it's good to bear this in mind and be like, okay, all right, I did really good, but let's try to have it like even a little bit better, even a little bit more than what I already have. So to me, it's not being greedy or whatever. It's just like, optimizing thing and trying to maximize your output with the asset you have. Because it's also, being proud and valuing, all the time that's been spent in the business. Because all those hours, all this time that will never come back, all this time the owners like spend away from family, not seeing the kids, not taking care of the missus or thing like this, and And because that's just business life, it's just so full on. But all this, they never get it back. So at least, getting like a good paycheck at the end is the minimum you can ask.
I think that's real, and we take it for granted. So I'd love to unpack with you, what does it look like to build a business as an asset, not just as a way of making a living and building a lifestyle?
Yeah. Well, there's a lot of aspect to it, I would say. So in valuation, so as a valuer, when we approach a business and we try to understand what they're doing and how we can value it, one big thing is, okay, is this owner just getting a job, or is he building a real business that is sellable? That's the 101,
And how do you define?
How do I define it?
Each different pathway.
So the building a business is, to put it in a nutshell, if you can walk away from the business and go in wherever you want, let's say South America for 3 months and come back and nothing collapsed, that's probably a good business, right? If you go to Bali 2 weeks and you come back and it's a complete disaster and everything stopped, it's probably not a really good business. I mean, it's not that it's not a good business, it's just not really well structured yet.
It's not saleable, is it?
Correct, yeah. Because the issue we have with owner-operated business, or owners in general, is the business rely on them so much because they build it, they created it, they know it from top to bottom, and they know everything in the business. So if you remove that person, all of a sudden, what we call goodwill, so the goodwill is leaving the business. So what you have to keep in mind is, how can I build my goodwill, so which is the intangible value of a business, but how can you build that and leave it in the business, not take it with you? You know the good. You have to build your business and make sure you become redundant. I would say that's the mindset you have to have. So if you can make yourself redundant, right, the business doesn't need me anymore. I'm nothing to it. I just build it. I put all my energy in there. I put the right people in the right seat, doing the right thing. Now it's just like rolling by itself. I'm just here to, make sure things are happening. But I can step out, eventually put someone else, and that's going to be as good as it is, or maybe even better. I come across some owners, sometimes they're like, I know I'm a handbrake to the business. I need to leave now because this business is just waiting only for one thing, is just to take off, and I cannot do it myself. So I want someone that can do that. And that's pretty smart, in my opinion. It's just like being self-aware.
Yes.
And this self-awareness is very important. So, yeah, building an asset, so just to go back to your question, is making sure this goodwill stays in the business. So when the business owners step out, someone else can step in, run the business for them, or eventually even like private equity firm, they buy businesses, they put a manager in place, and they oversee what it's doing, and it's still going well, So that's building a good business. If on the flip side, as I said, if you step out of business and things start to get shaky, people get slack, sales are not coming in anymore, no one is billing, blah, 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 all the things, means like there's a problem in your processes, your system, your structure. You probably don't have the right person in the right place, or your culture is not right. So there's a lot to it. But in a nutshell, that's what it is. So
as a valuer for people who don't understand what goodwill is, give me a definition of goodwill.
It's a bit of it's the intangible value that is attached to your business. So when we say intangible, it can encapsulate a lot of things. So that can simply put, it could be like your client list, or the client the relationship you have with your clients. That can be part of your goodwill. It's not all your goodwill, but it's part of it. The way you do things, the way you approach clients when you see them, the way you're going to deliver work. There's a lot of things to it. The goodwill is all that. The culture of your company as well. If you have good people, they take care of each other, they take care of your client, they're proud of what they're doing. It's part of your goodwill. Your name out there. When you got to rock up on, I don't know if you're, a plumber, right? You're a plumber, you rock up on site, John Plumbing, they're just like rippers, they're really good, etc. Well, that's part of your goodwill. People speak good about you, and so because you build that, you deliver really good service, you're taking care of everything. You also, on top of technology, because it's nowadays you have to, it's just part of delivering good service and good product. So all this, is part of your goodwill. So it's hard to just like, say, oh, that's goodwill. It's goodwill is a lot of things. It's just
yes, it is.
But think about the intangible aspect of a business. So your tangible will be your equipment, your people, what you do. That's tangible. But the way you do it is intangible.
It's how people feel about your business and the relationships, isn't it?
Correct.
In a nutshell.
But there's a lot of, you can be trained on that. It's not. People will think, oh yeah, but no, goodwill is so abstract that I won't spend time on that because it doesn't interest me. But it is abstract, but you can also get a lot of training on that. You can get leadership training, which is excellent when you start reaching a certain level. You need leadership training, management training, the way you talk to your employee, the way you talk to your clients, the way you interact with it, etc. So there's a lot of training about that. So I would highly recommend business owners to get at least that, leadership, management training. There's sales training. There's a lot of different training you can get on your soft skills. So your goodwill will be highly impacted by your soft skills and how you can develop them. But it's possible, And when you start your career, I would say you highly focus on your hard skills. So how you do things. And for example, in my area, it's like financial analysis. Understanding how P&L works, balance sheet works, etc. So really hard skill, like technical stuff. The higher you go in your rank and the more mature you become in your career, soft skills are more important, because hard skills are a given. You expect like a director or whoever, he knows what is a balance sheet and P&L, right?
You hope so.
You hope so. But your soft skill is what makes the deal happen, like the relationship you have, the way you just, who you are as a human, And so if you haven't been fortunate enough to get all that while you were a kid, or, you didn't grow up in an environment that, facilitated all that, it's not too late. You can still get training if you're well-intentioned, you want to do things, you want to change, and you're open, and you put your ego on the side, you humble yourself, and you're like, that's what I want, that's where I want to go. There's a lot of things that can be done, and all this soft skill will really impact the goodwill of the business as well. Yeah.
So I'm going to give us an example to work with and provide some context around it. I'll start with the difference between a well-organized, let's call it a really great business to buy from an investment perspective, versus an average business which needs a lot of work. Could be the difference of 1 or 2 times its multiple of profit. Is that about, do you agree with that?
Oh, yeah.
And maybe more, but at very least.
Absolutely. So how does all this, what I'm saying, which is maybe abstract, how does it translate in dollar value? So a poorly organized business that is not performing, your what we call a multiple. That's one way of valuing a business, but let's focus on that method for now. So the multiple is a multiple of your net profit, right? Or there's different ratio, but let's focus on the net profit for now, just for simplicity. But so the multiple of net profit, if it's an average business, you won't get much out of it. Maybe, as you say, 1, 2. If it's heavily reliant on the owner, let's say a one-man van, so again, to go back to the plumbing business, this guy is just like by himself, maybe with an apprentice in the van, just going around town and laying pipes down. Nothing wrong with that. But if this is the only thing he's doing and that's the business, well, no one's going to pay for that, right? Because at the end of the day, if he gets out of his van, what is he selling? He's selling his stock, the van, maybe a bit of a name, if he has a good reputation. That's pretty much it. So as a valuer, usually we put a 0.8 to maximum 1.2 times multiple on that. That's about what they get. That's it. So that will be like not a bad business, but just like not great. Just you make a living. That's it. On the flip side, a great business with a bit more structure. So we're talking about employees. We're talking about having a location, so just an office, to work from. Having a great name, recurring revenue. That's the main thing to increase business value. Because between a good business and a good business, if this one has a recurring revenue, so sticky revenue, contract in place, long-term visibility, etc., and this one is just project-based, the multiple on this one will be lower, always lower. So we will get higher multiple on business that have recurring revenue. Then sometimes the industry doesn't allow that. That's another topic. But anyway, so business is more structured, systems and processes in place. So we're not talking about, I have spreadsheets for everything. Well, okay, that's a start, but let's get a better system in place. So I'm writing things on a piece of paper. So a good software to track, your inquiries, your jobs, who you need to invoice, you don't forgetting to invoice them, who you need to chase to pay, to pay the invoice, etc. So good system, good people that do that for you, a good process all across the delivering the job, etc. So all this is very important. The way you get your sales as well. So just the structure of the business, marketing, HR, all your documentation is up to date, etc. That makes a good business. So think about anyone can knock on the door, step in, I'll give you 2-month training, and you can run the business for me. That's the idea, and that will have like a high multiple. Probably like on small businesses, we're looking at anywhere between 2 and 4. Can be a bit more than that if it's really high quality, but. If we stay on the SMEs market, as we say, that's usually what they trade for. Yeah.
So if I gave the example of 2 plumbing companies, and let's say each company had equal amount of employees, both $4 million revenue, and I'll make up a figure, net profit of $500,000.
Yeah, both of them.
Yeah, both of them. Yeah. So you look at it, and on the face of it, you go, same revenue, same net profit.
Yeah.
So company A has high staff turnover because the culture's not that great.
Yeah.
The owner might be like a dictator, let's just say that happens. Let's paint it that way. The cash flow is up and down because they invoice, but their collections aren't that great. And they've got clients that they pay, but they take a long time.
Yeah.
So the collections days go out, but the profit is there.
Yeah.
And because of the way they are, they tend not to attract contract work.
Yeah.
So they get
jobs,
projects, or they just get daily jobs.
Yeah, okay.
But so that guy, so he made $500,000 profit. The guy over here in company B, he's well organised.
Yeah.
His staff turnover is lower.
Yeah.
His profit is the same, but he gets the opportunity to get contracted work.
Yeah.
So his revenues regular. He understands his business. He's got all the data, and his collection days are lower. So he's got no cash flow problems. For $500,000 profit, company A, I would imagine, maybe he sells it for $1 million, $1.5 million. Whereas this guy, he might get what, $2 million?
Yeah,
potentially. There's quite a big difference in the payout, isn't there?
Yeah, absolutely. You're spot on because. That's all those things we need to take into consideration when a business is valued and a business is acquired as well. And the cash flow, cash stress, because that will be easily flagged if you see a lot of interest, for example, from the bank. They have an overdraft, they use it a lot. What's the reason for that? Debt collection is not great, etc. And that might be also a reflection of the quality of their clients.
Yes.
Because that plays a role in the goodwill, so who you service and who you deal with. Staff turnaround, that's a big thing, especially now and especially in WA, where there's a shortage of staff, so that's hard. So if you cannot keep them, it means, well, there's something really going wrong. Unless they go, they leave for a bigger hourly rate. We've seen that, especially during and right after COVID. In the trade industry, there were just like a lot of people coming in and out just because, I get like $2 more there, $3 more there. Just it doesn't mean like the business was bad. It's just people were just taking the opportunity. So it is what it is. But all those aspects are really important. Yeah.
Yeah, and you're right, actually, because when I reflect on that, it's all the little pieces to the puzzle because you can't control everything.
Yeah.
You could have a great business, but the staff turnover is higher because simply Jack down the road offered $3 more and people just go, I'm just going to go and do that.
Yeah, and the grass is never greener, really.
Yeah, and then oftentimes they come back. If the business is good, you find that they come back.
Yeah, they come back,
and we see this all the time in finance. So even from a finance perspective, let alone valuing it for sale, the quality of the business allows us to leverage more. So if you said, look, we want to buy the premise we're operating out of, or we're expanding, we need more working capital, we will much more easily get lending from a bank for a company that's run well as opposed to one that's not.
100%. You actually touching on the good thing here is because there's the value of the business, but there's also the bankability because at the end of the day, when you put a business on the market, you can do all the valuation you want. The market will dictate, what it's worth. So we try to, keep our finger on the pulse and really get a good idea of what it should sell for. But sometimes you have a really good surprise, just like, wow, okay, that sells for much more than what we thought. But sometimes it's a bit hard, it's hard work to push a business out there. And the banks also will have a good look at all those things. You're right. Like if it's a business that is under stress, they will be like, oh, okay. Because then they will think, okay, well, the buyer is, then they will check the buyer, is he able to manage that business?
100%.
Because if it's not going that well, he better be really good to be able to, take over and make something out of it. So, however, if it's a good business, less stressful, the owner is not doing like, crazy hours, it's just like rolling and you're quite comfortable. It's still like business, so you need to be on top of it. But well, it will be
the
more
risk
bankable,
is less, right?
Yeah, of course. Yeah.
So it's a risk. We call it risk premium. And what we do, we say, well, if the business is run really well, we're prepared to pay more for it because the risk is less.
Yep.
But if it's run poorly, even from a banking perspective, well, we'll fund that, but we know you're paying less for it.
Yeah.
So actually, you've got a similar business. We know you can add that value, put your systems in place, and you'll make that business fly.
Yeah.
But you're buying it for half what its value should be.
Yeah.
For good reason.
Yeah, because you can never really, you can sell a business based on a little bit of its potential in the future, but all this is, it's up in the air. Someone needs to do that.
Yeah.
So if you haven't do it yourself, you cannot ask for the value. You can say, you can argue that, my business, can do this, can do that because of new legislation coming up or new market opening, etc. But at the end of the day, it hasn't been done yet. So you can push a little bit and get a little bit of value for that, but it still needs to be done and be proven. So it's better to do it now and sell something that is, you can demonstrate that it's able to do what you say it's doing, rather than trying to sell it on the, potentially it will do that.
Yeah, look, I think as much as that can happen, it's not regular. It's not the common way things play out.
Yeah.
The reality is, I find this a lot with people, they have an idea of a big amount in their head. I don't know where they get it from. Normally it's friends. My mate sold his business for this, so it must be worth. And that becomes the expectation.
Yeah.
But the reality is very different. And I ask my clients, who some of them have unrealistic expectations, I say to them, if you were a buyer and I put this in front of you, would you pay that much for it?
Yeah, that's a good question.
And what would your wife think about it? Because that normally the partner right?
Yeah,
But that's the reality check.
That's the 50% shareholder.
Yeah, that's right. What's the shareholder at home going to say?
Yeah.
And what's she going to ask you?
Yeah.
And would you do that? And that gives them pause for thought. It's not to say that you've got a bad business or you're bad. It's just to say, let's get a reality check of where we are and what we might need to do, because you can increase the value. It's not to say that just because it's that way today, we can't change it. Why don't we look at what we need to change and increase the value of the business, and then we'll sell it.
Yep. Yeah, no, you're right. But there's also a lot of psychology behind it. And, we have to understand at the end of the day, the owners first they probably put a lot of time in that business, so it's a lot of sacrifice. So we have to be respectful of that. And owners being owners, they're usually leaders and entrepreneur, and they have big egos, and they're just like, that's my way, and that's you need that to be able to be a good entrepreneur anyway. So that's just part of their nature usually. So I think you're right. The hard thing is to also manage expectation and just try to make them understand. Well, sometimes you need to change things here, because otherwise you won't be able to hit the target you want or achieve what you want. But it can be tricky, because there's a lot of emotion involved.
There is.
There is. Just their baby. There's a lot of owners. They don't have a lot outside of work. They don't have a lot outside of their business. It's just a bit of family. The business, the odd goal for whatever surfing or whatever you do over the weekend, but that's pretty much it. So the life is the business. So we also have to understand, removing that, it's a big chunk of their life you're removing. So there's a lot of emotion involved. Yeah, and I'm always respectful of that, regardless of the way it goes. If they agree with what we say it's worth, or if they want to gauge us for the business sale or thing like this, it doesn't, for me, I'm always happy to work with them. But if they don't want to and they get a bit offended, I'm also comfortable with that, because I don't want to offend anyone, but it's just I understand where it's coming from.
Yeah.
And I get it. It's just sometimes it's just some people need a bit of time also to just think about it. Yeah.
I find that, especially if they've the business is their life and it has been for a few decades.
Yeah.
It's a pretty big ask to be confronted with something that you're not expecting and totally opposes what you believe.
Yeah.
To actually go, oh yeah, I'm on board with that.
Yeah.
You just don't, right? You go,
no,
what are you even talking about? How can that be true? And then you go away, it settles. Because most of those people, they're intelligent and quite rational.
Oh, yeah, of course.
Just in the moment, they can be a bit emotional.
Yeah,
they go away, think about it, and come back and say, oh, yeah, maybe you're right, but how do we even do that? So I'll put a case study on the table that we can unpack and then hopefully help people to think about how they might structure their business so that we increase the asset value. Because I'm very big on saying if you're using part of your life to build your business, it's not just for cash and for good lifestyle. You do have an asset.
Yeah.
Whether you realise it or not, your business is an asset. You're building something.
Absolutely.
And it's worth money.
And that's your biggest asset usually.
Yeah.
It worth more than your super.
Yeah. So if we actually take stock of that for a moment and say, no, actually, I'm building an asset. There are ways and things you can do with that asset that increases that value. So here's my case study. I'm working, I won't tell you who it is, with a company now.
Yep.
They've been running for 3 decades. So really well established, good client base, well-known, bloody great people, wonderful people. And it's one of those businesses where it's grown organically.
Yep.
So there's nothing on this I'd say is bad. It's just
happened.
It's an evolution,
Yeah.
right? You evolve the way you are. It started in the backyard.
Yeah.
And it's grown now. They've got 40 people.
Yeah,
So it's reasonable size.
Yeah.
Turnover's great. Profit's pretty good. I'd say the culture's pretty good. The people care. Systems and process are lacking.
Yeah. It's typical from a Perth business. Yeah, we're a bit behind in WA on that.
I think so, but you grow into it and the business grows and you don't necessarily think about it as you go.
Yeah.
Because you're busy operationally trying to make sure your clients get what they want. And that's how you grow the business, right? Because the clients are always happy and we go, oh, just give it to Adrien. And Adrien's going, great. Oh, I need more staff. And operationally, you're making it work with your client in mind. And that's where your successes come from. So I'd never criticise those people. I don't criticise these clients at all. I just know, hey, that's been the journey.
Yeah.
Right? It is what it is.
Yeah.
So what we're trying to do now is we're saying they're getting older and they want to exit. And we had a frank discussion about it and agreed probably now the way it's structured and management's very loose.
Yeah.
Aren't really any defined job roles. people kind of know what they're in charge of, but there's no accountability.
Yeah.
Like
okay.
none.
Yeah.
But the people are good, so things get
So they
done.
do it,
But
yeah,
it's just so informal.
Yeah, yeah.
And if the owners, they do go on holidays now and the staff take care of it. So we go, okay, the business does not collapse. Yeah, but it's pretty lax. There's no governance.
Yeah.
Do we know what our cash flow looks like week to week? No.
Okay.
Do we know what our break even is? No, not really.
Yeah.
So there's no planning either. So we reckon in their industry probably they'd get 2 times their profit.
Yeah, okay.
And knowing the industry and what the benchmarks are and what other businesses have sold for, we think they can get to 3.5.
All right. Yeah.
That's a big stretch, right?
It's massive, yeah.
But that's big money to them.
Because you have to remember that sounds like a small number, but it's time the bottom line of the business.
Yeah.
So
And the bottom line in this business is very good.
yeah,
They're very good
all
operators.
Of a sudden you go from like 2-3 million value, let's say, and to if you increase by 1.5 time, then yeah, you end up with a business that is like 5, 6, 7 million or whatever it is, but. It's a big gap. Yeah.
It's a massive gap.
1.5 is a big gap. Yeah.
Yeah,
We
so-
usually just finish on that. But when we do evaluation, usually the number, the multiple will be, if we change it by 0.2 or 0.1. It's all in that. This business is like 3.2, but this one is like 3.1 or 3.05. So that's the viability. So 1.5 is massive. Yeah.
Yeah, that's actually a good reflection.
Yeah.
And I didn't think of it like that. We just did comparisons and we said, well, we know we can get there, but the gap for them on the payout is so huge.
Yeah.
They're going, actually, that's a good point. What do we need to do?
Yeah.
So I'm going to throw that over to you. So that's a snapshot of the business roughly.
Yeah.
So lack of accountability, although the people do good work and they get stuff done.
Yeah.
Relationships are fantastic in the business with clients. It's great. Mostly the bills are paid on time. There's a bit of laxity. They don't follow up enough.
Yeah.
Poor systems and processes. Wastage because there are poor systems and processes.
Yep. Yeah.
People forget to do stuff. Accidents happen, then there's rework.
Yeah.
And they've got to make it up to the client, that
Yep,
sort of
yep.
stuff. So you get the picture.
Yeah.
What would you say to those guys from a valuation perspective that they need to do in that business to get it up to speed where an investor or another business, a good quality business will say, hey, we'd love to buy you and we're willing to pay for it?
Yeah. How long the staff have been in place? They've been there
Long
for
term.
Long term, right?
Yeah.
So they know the business really well, right? So,
They know it.
Yeah. So that's an asset, but that's also a bit of a trap because, as you said, there is no system and processes in place. The procedures are probably non-existent because people are just, but I know how to do it. Yeah, you know how to do it. What if I take my cousin or my little sister there and she comes in the office and how's she going to do it, So having procedures, process and systems in place is quite important to structure the work and make sure people that have been there for 15 years can either easily transition and teach the new generation, or someone can come in and within a couple of months, hit the ground and run with it. So because otherwise the training is going to be too long, people don't have time, etc., etc. So yeah, if you flag that the system and processes are non-existent or really bad, that would be one of the priority. Just to get that up to speed. The system will also help with the wastage. So you say the bottom line is good, but it could be better.
Yes, 100%.
So it could be better if there's less wastage. And we're not saying completely changing like a typical consulting work, like chopping heads and reducing costs and maximizing blah blah blah. Not necessarily, and I don't do that a lot. Don't see that a lot in WA just because of business are usually healthy unless it's everything. But for a healthy business like that, you probably want to optimize things. So how can we do a little bit more with what we have? We don't need to make anyone redundant or nothing, but just like the wastage. Okay, maybe we quantify that, or we value that? How much money do we lose on wastage? Is it, if it's let's call it like $500,000. I don't know how big this business is, but $500,000. Okay, let's say within 12 months, we try to chop that by 50%. So we don't lose $500,000, we lose 250. And how do we do that? We got to review our process, and we review our systems, and we try to put like things in place that and avoid that.
So they reckon the rework costs them 10% of their current profit.
Okay.
So if they reduce rework, their profit goes up 10%.
Yeah. So say 10% is a lot.
Yeah, it's huge.
It's a lot. Yeah. So what is important when we do work like this is to really try to quantify things, try to track and monitor. So let's say we want to reduce wastage or redoing things. Okay. So before even thinking about how do we reduce that, so how do we monitor that? How do we quantify, the number of jobs that needs to be redone? Okay, so let's start with that and put a system in place or a process that enable us to track that. Okay, so now after a couple of months, we know every week we have to redo 2 jobs every single week. Okay, cool. So by the end of the year, we want to redo only 1 job a week. So we reduce that by 50%. Okay, and then we work like this. So now so we have a target. How do we achieve that? Why are we redoing those jobs, etc.? So we dig. You probably know how to do that, but just like you go and you grab all the information you can, and you just try to, one question at a time, and you answer that question, and just get a bit of efficiencies going up there. That would be the low-hanging fruit, if I can say. Wastage is something you can fix fairly easily when the business is not that organized, because it's just organization. That was a really, really, well-organized business, like, I don't know, like a car manufacturer or Toyota or whatever, they're just like really on top of that.
Yep.
So that's hard to reduce wastage because everything has been covered already. But if it's not well organized, you start with the low-hanging fruit. What can we do quickly over the next 12 months to improve that and just get back 10% of profitability? So that would be one. You said accountability and job description on that here. I think that's very important, especially just to, as we say, transition for transition. So if the admin has been there for 20 years, she probably knows the business back and forth. But as when she's going to retire, we know someone else to come in, and hopefully she will be able to do a transition. But what if she's sick, or what if she has a stroke, or what if she's get hit by a bus? We don't want that, but it can happen. So you want a transition plan in place, and you want at least the minimum procedures in place. Okay, she's doing this. This is how you do it. Then you will learn with time how to optimize it and do it better and faster. That's fine. But at least someone comes in and they're not completely lost. They know roughly what to do. So I would say job description form, procedures. So a procedure will help you with the transition. A job description form will help you with just making sure people stay in their lane and are efficient, because inefficiencies also come from, I do that because, you asked me to do it, or because no one else was doing it, so I did it. Yeah, but that's not really how it works, because then you end up grabbing stuff and double handling sometimes. So you're doing it, but the bloke over there is doing it as well because he didn't know you were doing it. So thing like this. So it's good to organize. Say, okay, you're responsible for that, and that's what we want you to do, and just do it well. So this, and with that, usually we try to put KPIs as well, so key performance indicator, just to monitor the performance and see how good they are at the job. And if we push it even further, just for culture, enhancement, if I can say, or just to keep people, we put also a bonus structure in place. So you know what to do. We're going to measure your performance. And if you perform really well or outperform, you get rewarded. If you want to push the business hard, that's fine. You get rewarded. If you don't want to, that's the minimum we ask you to do. With that minimum, because we still pay you a salary, right? Remember that? A lot of employees forget about that. But we pay you a salary. That's the minimum we're expecting. If you want to cruise and have a chill life, that's fine. That's the minimum I ask you. If you want to push hard and become the next manager, the next ops manager, the next director, eventually take over the business, well, you need to overachieve. And you will get rewarded because as a business owner, you also get the benefit of that, when you have overachievers. But you want to, give them a piece of the cake as well. So, I would say that's probably where we start, just to get a bit of an idea of all that. We love to also do what we call team advisory board, so team interview. So we pick up like random people in the team, doesn't matter their rank, doesn't matter where they are, what they do, doesn't matter. Just how long they've been there, etc. It doesn't matter. Just like random people. And we just ask them, like, how is it going in the business? What do you like? So we have like structured question and then structured interview. And we try to get as much information as we can from there, and just understand, because usually there's like things that come back around. Just like, oh yeah, this is an issue, and then the other one will say, oh yeah, that's an issue. Oh, yeah, the other one, they don't know what the other one has said, right?
Yes,
it's very confidential, and usually the reports only go to the owner, but they will pinpoint like things that are an issue in the business. And then we know where the issue is, and we need to address that. Yeah,
yeah, we've done that before in the past, and it works beautifully.
Yeah, it's very good
because people on the ground know.
Of course,
whether we think they do or not, they do know.
Mate, so I went to a launch at the WA Mining Club. It's big. I don't know if you've ever been there, but they have like massive launch, like 400, 500 people coming, etc. So it's quite interesting to go there. And I had a person next to me, and I talked to. So he used to work for Mona Delphus, like pretty high ranked, and I asked him, what was your main challenge, and when you were managing those like huge team, like we're talking 1,000, 2,000 people, so it's big teams to manage and deliver on projects. So, and he said, people management is the hardest thing, and that's where you need to be good as a leader. And he said, one thing I did is I really make sure I was giving everyone attention, and it's not because you're an engineer that you're better than the boilermaker over there. And he said, Adrien, you'll be surprised, 80% of the ideas come from the guys on the ground, the boilies, the sparkies, all those guys, because they're smart. They're not dumb, right? It's not because they haven't done master degree or whatever. They're smart people. And they come up with like really great idea because they do things over and over again, and they can see and they can analyze and say, oh, well, if we do it this way. So he said 80% of the great idea we had were coming from those guys. Then we take the engineer and we say, look, we need to talk here. There's this idea. How can we make it happen? Oh, yeah, that's a great idea. And then those guys, the engineer, make sure it can happen and with the skill set. But the teamwork is great, and don't underestimate like the people that are working on the ground, etc., are not in the office, but they have a lot of things to share as well. And when we start working with people, usually we people that have been there and working in the business, they know the business better than you.
Yeah.
So and the owner will tell you certain things, but because of also sometimes the pride, and they also want to only show the great thing about their business. So you want to talk to everyone, make sure and filter it as well, because some people will complain about little things. Sometimes they just focus on the little things, and that's our job to just like, no, well, this is not an issue. It doesn't matter. But if something comes over and over and over again, that's something that needs to be addressed. Yeah.
So if I'm a business owner and I'm thinking to sell my business, I'd welcome you to provide some insight, no pun intended, on your business name. But I would actually welcome you to provide some insight, because the truth is, if somebody comes along to buy my business, they're not going to just hand over and check and say, hey, this was great. They're going to do due diligence. Yeah. Some people don't know what that is. So due diligence is the process where they basically unpack everything about my business and validate what I'm saying. So if I'm saying, I've got a great culture, my clients love me, customers pay on time, they're going to go, great. But we can't trust you. So they're going to go through my accounts, they're going to talk to my people, and they're going to validate, is that true? So the beauty of having you come through first and put your eyes on it is that you're you're on my team, and you're going to say to me, I hear what you said,
Yeah.
But did you know that this, and this is out of kilter?
Yeah.
And I'd rather you tell me than a potential buyer
Yeah.
come and tell me and then say, well, either A, I don't want to buy your business now, or I know you want 3 mil, but I give you 2.
Yeah.
Because that's all it's worth.
Yeah. And it's a bit hard. Yeah.
Yeah.
Yeah, absolutely. But you'll be surprised how usually people are not ready to hear that. Yeah. They're not ready to hear that. They just think, it's just because at the end of the day, that's just one opinion. That's true. It's just we hope that because we're professional and because we have a bit of experience as well, people will trust us. But that's still just one opinion. So, and as I said before, owners or entrepreneurs are usually a bit hard-headed. So. So they're like, yeah, whatever. I
do try and encourage people though, because
but you're right.
The valuation, as much as it is an opinion, it's an opinion based on data. And I say to my clients, regardless of that opinion, if somebody's looking at your business and validating, what they're coming back to you is with fact, even if you don't want to hear it.
Yeah. Yeah.
The facts are the facts. So even if you don't want to listen to that opinion, that's choice.
That's the fact,
but listen to the facts, because they're not made up.
No.
So you can choose then to say, I don't like hearing it. However, if that's what it is, it is.
Yeah.
It's an opportunity to do something, and you can choose to do nothing. It's still a choice. It's conscious. But if you did something about it and your business was worth more, is that better?
It's a no-brainer. In my opinion, it's a no-brainer. And every business owner should have this kind of session at some point in their business life, and rather sooner than later. Because the earlier you do it, and it's a bit of an investment, right? Investment in time, but also a bit of money, right? It's not free. But it is very useful because it's a long-term investment, If you unpack things about your business and someone tells you, look, that's the thing you need to improve, and if you're at the end of your business life, let's say in 3 years I want to retire, we give you like a list like that to complete. You're like, oh man, it's just like, I made my money, I have like the 3 houses, I have super, have the boat. Do I want to do that? No, probably not. Just set it like that. Doesn't matter. Whereas if you do it earlier, in your career, and let's say you have another 10 years in front of you, let's say, then you'll be motivated because then, that's going to probably take me 12, 24, 36 months if I take my time to complete.
And it does take time, doesn't it? Implementing these things is not overnight.
You're spot on. That's the only other thing is people come and say, I want to do this. In 6 months it's going to be done. No, mate, it's not going to be done in 6 months. It's going to take time. You have to be a bit patient, and build the but 24, 36 months max, I would say, for a good project. And then look, in 3 years' time, you have a really great business now. You still have so if I take my example of 10 years, you still have another 7 years where you can really consolidate all the hard work you've done. And after that, you just have a great business, to sell with good multiple. You're just going to get much more money.
So if I reflect back on the case study I put on the table, and if those people had sought advice earlier, and 3 years in they'd implemented the things you were speaking about, today they'd have more money in their pocket. We already did the numbers with them, so we know for sure. There's wastage, there's all sorts of things. Their profit would have been higher. Their stress would have been less because they're not putting out fires. You'll have a few fires to put out. It's business.
Of course,
but the number of fires they put out are quite significant and take up their time. So they wouldn't have the stress and the headache. They'd have more money in their pocket and their business would be worth more.
And attract also the next generation of worker. One thing also owners, especially baby boomers, right? Baby boomers are the major part of the workforce at the moment, and they're getting out of the workforce, right? They're coming to retirement. We have to remember 2 things. Between when they were born and now, all right, Australia has been booming. So it's been a really good economy. So as I was saying at the beginning of this discussion, a lot of money has been made, and still, we're still making a lot of money compared to the rest of the world. That's an amazing country, but quite easy to make good money. It's getting harder and harder, but it used to be really, really easy. Despite what people say, that's a fact. Again, you were talking about fact. That's proven. It's been quite easy. So fact number one. Fact number two is you have a new generation coming to work. Gen Z, millennials. I'm a millennial. I was disappointed when I learned I was a millennial, but I am. I checked the date of birth. I was like, oh, really? Oh, no.
What would you have preferred?
What? Gen Z or millennial?
Yeah. What, Gen Z, Gen X, what, millennial? Because you were disappointed. So it says to me you expected something else.
I thought I was just the generation before. I don't know how.
Gen X.
Gen X.
That's me. And it sounds cooler. I'm just saying.
I know. Millennials since it's like that's the wankers, So anyway, it is what it is. But I cannot change my date of birth. I can try. But,
see, it's another fact.
Yeah, that's another fact. But not even millennials, because I think we just, in my opinion, we're the in between. In between the old school, hard worker. This is how you get, your money. This is just in putting the hours in and being loyal and etc. That's the older generation. We really have a big gap in generation now, and I think we've never seen that in history. It's just the Gen Z, they're not like that. They're not gonna die at work. That's the thing from the past for them. It's just like, no, I come to work, I do my hours, but that's it. I will work hard, but that's it. I don't want to do overtime, etc. Or they're going to say, well, the minute I go overtime, you pay me. It's just like, I'm not going to do more than I need to do. And it's a lot about you give me first and then I give you back. Whereas back in the days, that was like, no, you give to your employer.
Yeah, you prove yourself to me.
You put your work in, and then if you're successful, I will give you more. So, but things change. So we have to remember that, and I think that's by 2030, which is 5 years from now, they will be the majority of the people in the workforce. So you have to keep that in mind. Their mindset is not the baby boomers' mindset. Not at all. They're completely different. So if people want to transition their business well as well, they will be the one probably buying your business, either millennials or the Gen Z, depending on their date of birth. But yeah, that's the type of people that will be like owning business in the future, etc., or getting up the rank and slowly becoming managers, etc. So by putting good systems in place, just to go back to your case study, that's also enabling this new generation to come in. Because, as you know, if it's not on the screen, they're not going to touch it. They don't know how to write. I'm being hard, but
there's some truth in it. We've got data around that.
Yeah.
We've got data around that. Actually, their literacy and numeracy levels are relatively low.
Yeah.
By relative measure.
Yeah, I wasn't going on that. I was more saying like, look, we tend to write less and less. Now we type everything, so everything is digital, etc. So if you haven't, digitalized your company, that's going to be a problem. Because even people like me, as I say, I think we are in between the two worlds. Because I spend all my studies like writing, etc. It was just only later in my student life that we started using computer, etc. So I still have a bit of both, but I can see like the new generation. No, it's all digital. It needs to be on the cloud. It needs to be on the computer. It needs to be. So all this needs to be done. If it's still run the old school way, no one's going to be interested.
The investor won't buy it anyway, I think, because it's the inefficiency
and
is
then
there.
How do you double check? You talk about due diligence. Who's going to go there and flick like piece of paper? No one does that anymore. It's no. So they want to send us the documents on the cloud, you put it on a platform, SharePoint, OneDrive, whatever it is. Like you have all the platform, but anyway. So and then we check that and we see if we want to invest in that business. But yeah, in terms of compliance, in terms of just checking data, it needs to be digital. Monitoring, reports, it's very important to drive efficiencies, etc. We want to have a lot of reports from the business, and this is enabled by systems, and processes. So it's quite important, especially now, because of this generational transition, if I can say.
Yeah, there's a whole subject in generational transition. Love to get into that a bit more. We won't do that today.
It's endless.
But,
I've been to a workshop where were you there? I think about like managing Gen Z.
Yeah,
you
I
were
think
there,
so.
right?
Yeah.
Yeah, quite interesting. Yeah, how this is where I got all those like information. It's like, oh, it's true actually. They're very different. The way they think, younger people, the way their values as well. Their values are different. It's they need a lot more clarity on your vision. They need to have a bit more purpose in their life and things like this. So, you can be either old school and be like, whatever. They're just weak. This new generation, or you can be smart about it and be, well, you have to deal with it, mate, because this is just a new world, and like it or not, this is happening. So
I've got an opinion on this, which I'm going to share, maybe to my detriment. I'm very positive about it.
Oh, yeah.
And I like them because when they ask those questions, even if it doesn't come from a space that I think I value, the questions are right.
Yeah.
The questions are good questions. And if we actually listen to the question, even if the answer is, I don't know, makes our business stronger. Because the purpose, why are we doing this?
Yeah.
I don't want to do this just because.
Yeah.
If my business has a really good, solid purpose, that's actually good for the business.
Yeah, absolutely. Well, purpose is everything, and especially in this day and age, just everything is about the environment and the future. And I think we probably like sidetracking it a little bit, but we've been caught up so much in short-term profit, capitalism, and etc. And I'm not criticizing, but it's a fact, And I think it's good to have also a new generation that is a bit like, oh, wait a minute, where are we going now? Because what are we doing on this? This is our future we're playing with now. Maybe we need to be careful with this, or maybe we need to rethink the way we do things, etc. So, I think it's interesting. It's always interesting to get fresh blood coming in and giving you a different perspective. Anyway,
I think so.
And
they also are the customers of the future.
Oh, absolutely.
Their cohort. Yeah. So, I see a lot of value in it. Yeah. Well, they're young, and like we were all young once. A bit of arrogance often comes with it, and you think and we're all there.
Yeah.
And the generation before us probably had similar thoughts about us, by the way. They go, what do these guys know? Yeah. Well, it's no different. But if we find it in ourselves to be a bit more flexible and just listen, we don't have to agree with everything. We acknowledge, look, you're young, you're at a stage in your life where you may need to mature, and when you've got more experience, you'll see the world differently. Yeah. Like, we're just humans, right? But we could embrace some of the things they talk about and just be more flexible around it, because they can't be. They're not old enough yet to be flexible.
Yeah. Yeah, that's true. And going back to, the value of the business, everyone heard about AI and all that. And there's a lot of, leverage that would come from that. And, young people, they're just all over it already. You hear like in the news almost on a weekly basis, these kids, 16, just like created this business all based on AI. And it's like, it does what you do like 3 times faster, better. It looks better. Everything is better just because it's just leveraging all this technology. And the thing is, we didn't grow up with that. But they did. So, if you can leverage on something, it's just trying to make them work for you and leverage on their skill set, etc. Because they might not have, the old school skill set as we might have ourselves. But they will have different skill sets, and different things they can use in the world of the future. So, as I said, like it or not, it's happening. So you need to embrace it and be like, well, it is what it is.
So I'm going to summarize.
Yeah.
So if I've got a business and it's in its relatively young years, are we saying design it? Do it intentionally. Design your business to increase its value.
Well, start with your end goal. What is your end goal? What is your exit plan? That's always a good question. And this exit plan might change over time, but at least having an idea of what you want to do with that business. Is it, growing it and selling to a bigger player? growing it, keeping it, putting under management, getting some dividends, growing it, buying your competitors, getting bigger again, and pushing that and being the big boss on the top of the hill. Can be that too. Or is it just a lifestyle business? But if it's a lifestyle business, bear in mind, it's not going to worth a lot at the end of its life, It's just, you need to have a clear understanding of where you want to go and then build your business around that. So, I'll let you finish what you want to say.
No, you can give the advice. You're the subject matter expert on what would you advise me? So my business is 3 years in.
Yeah.
I've got a few employees now. I'm still wearing a few hats.
Yeah.
But I've got a clear vision, and I don't know whether I want to sell it or not.
Yeah.
But I want the option to.
Yeah.
I do know that if I build it intentionally, systemize it, get some good people in, then my life will be easier and the business will be worth more. Mm-hmm. What advice would you give me?
To build it this way, you mean?
Yeah.
Yeah. Well, as I just said before, it's just building the business with one thing in mind is I need to make myself redundant. I cannot wear all those hats. I cannot be there all the time. I want to be able to say, all right, it's Thursday, 3 p.m. Tomorrow, you know what? I'm going to go and do something like go for a walk, a hike all day, go for fishing with the kids or whatever you want to do. You should be able to do that, whenever you want, like that. Okay? It's easier said than done because it's rarely happened this way. But try to go, that's the goal. That's to be able to, okay, if I step out, of the business, it's still running. That's fine. People are there, etc. There's things, and it also mean you could with the digitalization of your business and systems and processes, you can be on your boat over there. Just take your phone. You can see what's happening.
Yeah.
Right, and you can do soft touch like this. That works as well. But I think the very important thing is to have an end goal and building a business around that. If it's, again, just going to go back to my example, but lifestyle business might not be that well organized, just, good little business, but you won't get much out of it. So if you're happy with that, that can be fine for you. But if you want to, if you're out of this, if your end goal is not this one, it is anything but this one, I think, there's no harm to prepare your business and make it sellable. Because you decide to sell it, that's good, at least it's ready. But if you don't decide to sell it, at least it's structured and you don't have to push that hard, So there's no there's no lose situation. Whatever investment you put in your business and all this, energy and hours you put in structuring it, but be smart about it, that will always pay off. That will either pay off in dollar value when you sell it, or if you decide to keep it, etc., that will pay off in more free time for you and a better lifestyle. So it's always a win, always. But for a young business, 3 years, few employees, I say it's all about growth and scalability, and trying to keep an eye on the numbers. So at the beginning, when I actually had time contact, if I can say that, like an old friend from back home, contacted me a while back and she said, "Oh, Adrien, I just took over a business. Do you have a couple of advice for me?" Because she come from the banking. That's where we met at the bank. And she said, "Oh, look, I checked that." And she started to talk to me about financial ratios and all very complex stuff.
Very technical.
Yeah, technical. I'm like, drop all that. Just stop all this. This is irrelevant. You're a small business. You're starting. You have to check two things. Check your bank account every day. You don't want this to be in the red, So make sure you have cash, like a little bit of cash. How much cash is that? It's almost irrelevant. Just make sure you collect your payments and you don't spend more than you are. That's it. And focus on sales. Sales. Every single dollar you make, you put in marketing. You put in in sales. That's it. That's the only thing you need to do for at least the first 12, even 24 months. Just sell the crap out of
That is small business, isn't it? At the start.
Small
That's it.
business, people like, and a lot of consultants will be, oh yeah, you need a business plan. You need just like stuff, all that. You don't need that. You need to sell. You need to be good at selling. That's it.
And collect the cash.
Yeah.
And don't overspend it.
Exactly. So
That's it. That's the
credit
game.
card, no,
Yep.
you want a debit card.
Yeah.
Just like don't spend more than you have. Like you have that, that's what you spend. That's it. And really sell. So you have to be a good salesman. You can get training. If you're not a good salesman, maybe hire someone that can sell for you or get some training. But I would say that the number one priority is selling, because you need money to come in, right? You need project. You need to get your name out there, and you will learn on the way. Oh, but I don't really know how to sell. My value proposition is not there, etc. That's fine. Work on it. Just work on it. Every time you go out and you sell, you say, try to really be attentive and okay, I talk about this with the client, etc. They didn't like that, so maybe I need to work on this. They like this, they like that. When I send my proposal, that wasn't neat, etc. Maybe I work on that. It's like perpetual improvement.
I love that. Refine it as you go. Don't wait to develop the perfect solution before you launch, because you'll never get there.
Never. But that's the big difference between engineer and entrepreneur, for example. And sometimes they're one person. That's great. But engineer will always try to, make the perfect things before going to market. Whereas entrepreneur, they're a bit more like, oh, let's go, boom, boom, let's do
70,
it.
80%, that's fine. That's good enough.
Yeah, just do it. And you will improve, etc. And you will fail. You will fail sometimes. Sometimes you'll be ridiculous. Sometimes people will kick you out, etc. And that's fine. That's how you learn.
But the market tells you, doesn't it? That's the important thing.
Yeah.
Because the perfect solution's only in your head. Doesn't mean the market thinks it's perfect.
Exactly.
So I go 80% fine.
Yeah.
Is everybody going to get good value and get a win?
Yeah.
Good enough.
Yeah.
Now go and make it fly.
Yeah.
And then the market will tell you what to change.
Yeah. And you will come across nice people that will actually give you really valuable feedback as well. It's not everything is hard. So there will be people out there will be, yeah, look, it's great what you have, but maybe you should do this and improve that, and I will look at it again, because at the moment I'm not interested. But at least you get something, and you learn on the way. So yeah, for small businesses, I would say sales is number one, because then when you max yourself out and you max your 3 employees, or you say you have 3, right? Or no?
What? Us?
Yeah.
We got 17 people in our company.
Sorry. Oh, my God. Oh. You're not a small business. So what are you talking about?
We're still a small business.
Yeah. But anyway, so let's say you're 3 years in, you have 3 employees, you max them out, so then you can hire the next one, and you keep selling. But as a business owner, your number one priority is to sell and make sure the factory is working right, That's what you need to focus on. Yeah. Does it answer your question? Or?
Yeah, it does.
Yeah?
Yeah.
Cool.
I think we've cobbled it together, let's just say. I think
Okay.
the takeaway is it depends on the stage of your business.
Yeah.
If you're small and just starting out, cash is king. Sell like hell. Don't worry about the business plan. Refine your sales pitch as you go. Don't spend more than what's in the bank. Make sure you collect the money.
Yeah.
And then as you grow, then you can start
about the
planning,
structure.
and you plan.
Yeah.
Even my mature businesses, when we do some consulting work, we've got what we call the North Star. Where are we going with this? So that's always in our mind.
Yeah.
Plan the next 12 months. Don't plan 5 years. It's a waste of time. You can't plan 5 years because everything changes.
Yeah.
But you can plan 12 months, and even that we monitor and we probably modify as we go.
Yeah. Okay.
But so if they're starting out, it's very simple.
Yeah.
As you get bigger, you start to plan, all right, how do we implement things that make life easier for us internally, add more value, reduce waste?
Yeah.
And that can be systems, processes, and people.
Yeah.
How do we find and add good people?
Yeah. As long as every year is better than the previous, you're progressing. You don't want to be stagnant, because in business there's rarely stagnation. You either grow or you shrink. It's very rare to plateau, right? So you need to be always active and working on it. But sometimes it's a bit harder than it looks, etc. But as long as you're a little bit better than previous year, and it can be financially or just you invested in, because I valued the business not that long ago where they had a really good year, and then 2 years they just like went down, and barely profitable, and then up again the year after. I say, what happened, mate? And he said, oh, I just like put all the investment and all the focus on the business. And I could see the top line, going up, but the bottom line really. And then after 2 years, bang, it was just like bang on, because he just put all that in place, like hire the right people, the systems, invested in his business. So all the money went back in his business, all his profit reinvested in the business. And then he could really,
So he made the foundations better.
Yeah,
so the growth was
so
much.
He had like 2 hard years in terms of profit. But then after that, he can take like bigger project, turn to that. It's more efficient. Everything is better. So it's just invested so much in his business that now it's great. So it's good strategy. It's
it works, doesn't
long term.
it?
More long term. But it does work. It does work. Yeah. It's not wasted energy at all. No.
So tell me about your business and tell me where people find you.
Okay.
Who are you guys? What do you do?
Yeah. So inside advisory, so we're financial advisors, right? So if I can put it simply, we provide different services. So tax accounting, so you traditional tax and bookkeeping, including SMSF. And we also do financial planning, R&D tax incentive. So for startups, looking at launching new products. And I lead the consulting division. So this consulting division has 3 main services. We value businesses, we grow them, so we give growth advice, and we also sell businesses, so M&A transaction. So Insight Advisory, we have a website, really good website. We are on
What's
LinkedIn.
your web address?
It's insightperf.com.au. We are on LinkedIn. I'm pretty active on LinkedIn myself. We always are there trying to network, etc. So you will see us. And we are based in West Leederville, so just at the corner of Massewan and Oxford, so on Loftus Street, and Railway Parade. Yeah, so it's pretty easy to find us.
Yeah. I will put the details at the bottom of the podcast.
Jeremy
will work his magic, won't you, Jeremy? Jeremy, the producers over there.
Yeah. Awesome.
Adrien, what's your background? I didn't stop to ask you.
Yeah.
Who is Adrien?
So who is Adrien? It's a good question. I was born in New Caledonia. So it's a small island between Fiji and Australia. It's only 2 hours by flight from Brisbane. It's a small French island, so in the middle of the Pacific. So I'm French on paper, but I never really grew up in France. I have family there, etc. I've been many, many times in France, but New Caledonia is a bit of a hybrid, because we're 22,000 kilometers away from France, and we have a bit of a mixed culture between French and the island vibe. So we have a lot of Polynesian people, a lot of Melanesian people on our island. So it's an interesting culture over there. So I grew up there. I was born there and grew up there. I started my study over there, but because it's so small, you cannot finish. So I had to go to France to finish my study. I have a master degree in corporate finance, so I finished in Paris. I worked a little bit in Paris, then I didn't want to work in France. So I said, well, what are my options? And I had a friend that came back from Hungary at that time, so pretty unusual destination. But he said, "Mate, I have a job for you if you want to go there. Just that's the contact." So I said, "Cool. What is he doing?" He said, "Oh, he does merger and acquisition." So I said, "Oh, perfect. That's what I studied." So I went to Budapest, the capital of Hungary. Beautiful city, by the way, and great people. Hungary, I had really a good time. I went there, started working for that guy. It was a very small company. I didn't quite like it just because he wasn't never there. He was always traveling, and I was always by myself. So found another job. I actually changed, and I went into audit.
Yeah.
So I work for a big company there called Mazars. So Mazars in Europe is probably just below the Big Four. So you have your traditional Big Four, in audit, and Mazars is like number 5. So it's a big company. I think they're here in Australia as well, but not in Perth. So I worked for them for a year and didn't like audit. Really didn't like that. Sorry for all the auditors out there, but
it's not very creative work, is it?
Oh yeah, that's the least we can say. Yeah, it's quite boring. But look, good company. So after a year, I was like, look, guys, not really for me. So I think I'm going to leave. And I was like, I'm just going to go back home. So I went back home and I started like applying for, for different jobs. And I got a position at the bank over there. So for BPCE, it's called. So it's a European bank. It's one of the biggest one. But they're in New Caledonia. So it just has another name over there. But so I worked for them for 4 years. I was doing business banking. So dealing with small and medium business owners. And really liked it. I really gave me like a lot of good, basic skills, relationship skills as well, because I was seeing like a lot of people, finance, etc., etc. So commercial, so really, really good way to learn the craft. And after 4 years, I was like, oh, look, no, I want something else. And I actually wanted to live somewhere else, but I didn't want it to go too far from home. So I wanted to be able to go back home on a regular basis. So Australia was a pretty good opportunity, English speaking as well. So I always wanted to live in an English speaking country. It's different mindset, just different people. So I like that. So I came to Australia, stayed a year on the East Coast, just traveling around really. And then after a year, came to Perth and really liked it from the beginning. I was like, oh, it really looks like home. It's just bigger, way bigger, but just the vibe, the people, it's a bit the same. So I liked it. I got a job at Insight maybe 4 or 5 months after I arrived. And since then I never left. So I started with them, probably 6 years ago. And I bought in and became a partner about 3 years ago. So it's been a really good journey. The team is great. We've been growing, over years. They put a lot of trust in me, so which is great because at the end of the day, I'm not Australian. I am Australian now on paper, so I have my passport, but I'm not. Wasn't born there, and I'm also the youngest director in the company. So I really appreciate that, they value my opinion, they trust me, and they put me in that position. So that has been very good so far, and the team is great. So
fantastic.
Yeah, it's good.
And I'll add, you're a killer drummer. I had to weave that in somehow.
Yeah, thank you.
Yeah. I won't go into that any further.
That's all right. That's what I do outside of work. A bit of music and like my camping and surfing as well. But I haven't had too much time lately. It's just a bit hard doing a bit of reno on the house. I just bought a year ago, so I'm time poor at the moment. Really time poor. But it's good. It's so good.
Great. Thanks for coming on and sharing your insights. No pun intended again.
No, thanks for having me. That's great. Thank you.
Great discussion.
Yeah. Cheers.
Awesome. Thanks.
Yeah.